Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're actually going to be jumping into a private Zoom call recording that we had with the members here at CYPRX, doing a broad overview and fundamental breakdown of the total cryptocurrency market cap, the price fluctuations, and the order flow that we've experienced over the past consecutive couple of months since the beginning of 2024. So if you all find this video of value, hopefully you do, make sure that you take some notes. Do us a favor, smash that thumbs up button and subscribe. Always attempting to bring you guys the realest information. You guys are going to learn about the price fluctuations in the total cryptocurrency market cap, the bullish and bearish months, and what took place those months, what fundamentals backed those price movements and fluctuations. And then we're going to do a forward projection, what to be paying attention to moving forward. With that being said, as always, many blessings to you guys. Thank you all for returning. Sit back, relax, and enjoy this video breakdown. All right, so I just wanted to kind of do a overview because we do have some important fundamentals to be paying attention to, but I wanted to do an open discussion. So the more that you guys communicate when I ask questions, the better off the conversation will flow and go. So step out of your comfort zone and let's try to really pick apart the markets. And you all in your own careers should be able to do this. One thing that my mentor taught me a long time ago was that whatever asset class you are attempting to trade, you should know the ins and outs of it. You should know how it moves, why it moves, what certain things it reacts to, where the price action is at right now. Like if you trade GBP JPY and you don't know what price GBP JPY is at right now during Asia session, that's a problem. Now, I'm not sitting here saying that you need to know every single tick, but if you just don't generally know what the price action looks like, if you haven't done your Sunday, Monday market analysis to get ready for the week, why not? You're wrong, right? Start incorporating these markets into your everyday life, even if you're not trading them. I'm not sitting here saying you should be placing trades, but you should know why last week, just as an example, GBP JPY was bearish, the vast majority, or not bearish last week, but the vast majority of July, we saw a very interesting pullback and sell-off in GBP JPY. And even though I'm not trading GBP JPY, because I love that pair, and it's the pair that I mastered, that I became fully profitable on, and that eventually one day, after I'm done slaying GBP USD, I'll pick back up, I pay attention to it. I know why it breathes, why it moves up and down. I know that the vast majority of the fundamentals in July were supporting the possibility of an interest rate hike from the Bank of Japan, which tends to create sell pressure on the Great British Pound and strengthens the yen, right? And so knowing that, I know why price action reacted the way that it did. Same thing in the total cryptocurrency market. If you're a crypto trader or investor, you should know why these price fluctuations happen. All right. It's the same thing with gold. Same thing with any asset. You should know why things are happening, so that way you can really start to play chess with the asset and forward project the possible outcomes during that specific week or that month. And it'll make you so much more ahead of everybody else in the market, because 98% of market participants are not doing this. I promise you that. You go up to any retail participant or even somebody that has six figures in this market, most likely are not doing this type of analysis. They are just buying and selling. They have some bullshit strategy, buy low, sell high, indicator this, indicator that. Oh, I watch Bullish Moon Boys this. Oh, I'm subscribed to this Telegram that tells me when to buy low, when I da 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 da. Nobody's actually taking the time to really learn these markets. And that's why this community is different, because I hope that you guys are taking the time to really learn why these price fluctuations are happening. So we have the total cryptocurrency market cap, and I'm just using this as an example. You can do this on any risk asset as a whole, how the market's moved up or down based off of dollar strength and divergence in the dollar. So we know that when there is a risk on market mood, a risk on market environment, what tends to happen to riskier assets? Can somebody tell me? What direction do they tend to go in intraday? And then zooming out, if the entirety of the month was risk on, what direction do risk assets tend to travel?
Uptrend.
Uptrend, right? And then same thing vice versa. So I won't waste time asking that question. If the predominant fundamentals for the day or the week or the month were risk off. That means they drove more sentiment to dollar demand for its safe haven status or for gold during its safe haven status or whatever, then it tends to weigh on risk assets, right? So let's just take a step back and let's just go over these price fluctuations in the market and total cryptocurrency. And let's take a look more in depth at July so that way we can understand where we are at now and then go over where we are potentially headed and talk about those environments so that way you guys can start to learn and incorporate that in your investing strategy. Because 5, 10 years from now, I hope that I'm still here 5, 10 years from now, and I plan to be, but just in case I'm not, you guys can do this yourselves. And you can start to call tops out and you can start to know when to exit positions. Not fully, but maybe just start to profit take a little bit based off of market sentiment, or know when to implement capital into the market based off of market sentiment. So back in March, right? The middle of March, when the market topped out at roughly about 2.7 trillion in the total cryptocurrency market, why was this? Can anybody tell me off the top of their head? What one single fundamental factor mid-March weighed on risk assets like crypto across the board and strengthened the dollar?
Higher inflation, no rate cuts.
Good job, Angel. Spot on, right? Higher inflation, weighed on risk sentiment, pushed back rate cut hopes, strengthened the dollar, and we saw an outflow of riskier assets like crypto as investors started to price the possibility of higher interest rate environment for longer into the markets, right? So you can see here's a fundamental, March 12th, 2024, right at the peak of $2.7 trillion, inflation picks up to 3.2%, slightly hotter than expected. When we see these types of fundamentals, particularly surrounding the United States dollar, we know that that tends to create a risk-off market environment because that leads to a higher interest rate environment. And in a higher interest rate environment, borrowing is harder, leveraging is harder, dollar is earning more yield or higher yield with the higher interest rates. So investors are more inclined to hold their assets denominated in dollars longer, so on and so forth. And so that creates more appeal in dollar and less of a demand for risk assets. And we can see that reflection. Then come roughly towards the end of, and what you'll notice very interestingly about these 3 points where the market bottomed out both in March, in May, and in July, there are similarities. So March 20th, okay, right down here at the bottom of price action, total cryptocurrency market cap bottomed out at $2.2 trillion and started to increase in value due to a risk on market sentiment. Does anybody remember one fundamental factor that drove this risk on sentiment, or could possibly just call out some fundamental factors that would have driven demand for riskier assets and less of a demand for the dollar? Does anybody remember? What happened here in this area mid-March? Think about what's coming up this week. I'll give you a hint. It's one fundamental report or data release that's coming up this week that happened March 20th.
Fed funds rate.
Good job, Jamie. It was the Federal Reserve funds rate. Now, the funds rate came out the same. They held rates at 5.50%. So that did not change. Just like on Wednesday this week, it's most likely not going to change. I can almost 110% guarantee, based off the data, that the Federal Reserve is not going to hike rates and is not going to cut rates. They are most likely going to keep rates the same. So that means, what do we need to be paying attention to instead of the rates themselves? We need to be paying attention to the what?
The speech after for hawkish and dovish.
Exactly. Boom, right? Perfect. So we need to be paying attention to the tone following the interest rate announcement, which is most likely going to be 5.50% unchanged. We need to pay attention to whether the Federal Reserve comes out more hawkish signaling to the market that they're going to keep interest rates higher for longer, or whether the tone surrounding monetary policy comes out dovish. That would be Jerome Powell saying things like disinflation has been predominant, right? Or continuing. Labor market is cooling. Economic data is starting to dwindle. We're starting to become optimistic that we're going to think or consider cutting rates at this next meeting. Those would all be fundamental factors and things that Jerome Powell could say that would support a more dovish leaning sentiment. And we can see here on March 20th, 2024, US dollar dips on dovish Powell, right? Literally at the bottom of price action. On March 20th, Jerome Powell's tone was dovish, and we can see an increase in value in the total cryptocurrency market cap. It's like ping pong, right? Up here, rate cut bets were weighed to the downside due to higher inflation. That weighed on risk assets, strengthened the dollar, and then boom, Powell's comments turned around, supported the rate cut narrative, signaled a dovish leaning tone, and supported risk asset buying as market makers started to price in the possibility at the next Federal Reserve funds rate of a rate cut that weakened the dollar and strengthened risk assets. Rolling over into April, right? So now we're in April. We know why the market started playing ping pong, risk off, risk on. April was predominantly risk off. Does anybody remember why that was? Before you answer, it was due to two leading fundamental factors. One of them, same or similar to March, and the other one was due to the geopolitical landscape. So can someone tell me what fundamental factor here at the peak in the total cryptocurrency market cap in April, roughly about $2.6 trillion, was the reason why we saw a risk-off sentiment? Can anybody tell me?
Wasn't it the third month of higher inflation?
Yep.
3.4%.
Good job. I think that was Eric. I think I noticed your voice, right? Was it Eric?
No, that was me.
Marcelo?
Yes.
All right, sweet. So you're correct, right? We saw higher inflation ratings. So remember that inflation is a lagging indicator. So that means, let me ask this question. We are about to get an inflation report in August, right? What inflation report are we going to get in August? July's, right? We're going to get July's inflation report. In July, we got the previous month's inflation report. So in April, you can see here, this report came out April 11th. We got March's CPI report. And you can see that it came in slightly increased from previous readings. So just like Marcelo just said, absolutely correct. February, we got higher inflation. March, we got higher inflation. And then April, we got higher inflation. So that weighed on the rate cut narrative. And you can see this is from April 11th. Look at where price action was at April 11th, roughly up here at a high. Market makers started to sell their positions and hedge against those depreciating riskier assets into the dollar. If you go look at the dollar on April 11th, it started to increase in value. To what degree? Again, that's up for debate, but it still started to increase in value. Then that risk-off sentiment was further solidified. What happened mid-April on roughly around the 12th and the 13th? Does anybody remember? It was a geopolitical event that happened.
Trump's assassination attempt?
No, this was back in April.
Oh, sorry, my bad. Okay, I thought it was talking about July.
That was
But
Israel and
good
Hamas.
guess. Yes. Who said that? Richard?
Yep.
Whoever said that, right? Yep.
Yeah, it's Rick.
Okay. Okay, cool. So yeah, you're right. It was the geopolitical escalation and tension in the Middle East, right? You can see here, April 12th, Israel-Hamas war kicked off. Remember when that whole escalation took place? It was a weekend. Remember, we talked about this in the chat. 98% of geopolitical escalations and tensions happen on the weekend. For some odd reason, I don't know why, but
always on Saturday.
it's literally always on freaking Saturday. I swear to God, I'm not joking. Literally been in these markets for almost 9 years now, and it's always on Saturdays. Always, always, always. So we saw that kick off. Now, just a general question. Okay. Why do geopolitical tensions like this create more demand for dollar and less demand for riskier assets like crypto? Can somebody explain that briefly?
Because the dollar is backed by the U.S. government, which is a
Right.
strong.
It's a safe haven.
Good job, right? It holds global reserve status. It holds global safe haven status. So when the world, i.e., other investors all over the world, are uncertain because of their own geopolitical situations or because of global geopolitical situations, they tend to hedge against the possibility of other assets outside of the dollar depreciating. And so the dollar increases in value. And so you saw on April 12th and the 13th, that weekend, investors flocking to the dollar as there was a possibility of another massive war outbreak, which was contained to some degree. Yes, there was a whole bunch of things happen, but it was contained. And again, profit taking on riskier assets. So we saw a sell off in April. Then down here, just like this fundamental piece, so I'll give you guys a hint. Remember what this was, March 20th, Jerome Powell, dovish comments. Right here, when the market bottomed out on the same exact day, Wednesday, May 24th, $2.08 trillion in total cryptocurrency market cap, bottomed out and started to increase in value for the month of May. Why was this? Somebody tell me. Real fast, do me a favor. If you all are enjoying this video breakdown so far and you're learning something, smash that thumbs up button and subscribe. And if anybody's interested in joining in on these private discussions and these Zoom call recordings where we break down fundamentals in depth to our private community members, you all can visit CYPRXtrading.com. The customer support email is in the description down below. Feel free to reach out, schedule a Zoom call with me, ask any questions that you may have. We'd love to have more motivated individuals on these private Zoom calls with us in the private CYPRX community. With that being said, let's jump back into today's video breakdown. What stopped the market sell-off in April? Market bottomed out in May, and why did we start to see it? Go ahead.
They kept the narrative for the rate cuts.
Say that one more time. You were breaking up a little bit.
They kept the narratives for the cut rates. So
Yep, good job. Yep, absolutely. They kept the narrative. I liked how you worded that too. They kept the narrative for cutting rates. They did not cut rates. They didn't solidify cutting rates. They just kept the narrative on the table. They pretty much said at the end of the day that they're still hopeful that we could possibly see rate cuts if inflation continues to decline, if cooling in the labor market and US economy continues, and so on and so forth. So they kept investors hopeful and forward-looking. You can see here, May 2nd, this is a report the day after that Wednesday. Federal Reserve Chair Jerome Powell's comments after 2 days of policy meetings were not as hawkish as many had feared. So what does this mean? This means that his comments were more dovish toned, right? Supporting the rate cut narrative. We know that a supporting rate cut narrative historically tends to benefit riskier assets. And we saw for the month of May, prices increase. So just like mid-March, when the narrative leaned towards rate cuts after the Federal Reserve funds rate, we saw a bullish month. Same thing like we did in May, then rolling over into June. Does anybody remember? Because I remember specifically, we called this out. We can even go back to the Zoom call recordings, just so you guys can see. We physically called this out on the 23rd of May. We go down here. Let's see, May 18th, May 23rd, right here. All right, anyways, I'm not going to push through the commercials. That's annoying. But we called this top out. So back when the market was roughly about $2.56 trillion as we were rolling over into June. Does anybody remember this fundamental report that created the sell pressure in total cryptocurrency market cap as we rolled over into the month of June? Can anybody tell me what created that sell pressure, that risk off market sentiment? And it was due to one key fundamental report. So I'll give you a hint. It wasn't inflation. It wasn't comments from the Federal Reserve. And it wasn't geopolitical escalations or tensions. It was another thing that we pay attention to as risk asset investors surrounding the US data.
Was it unemployment or jobs?
Good job, right? It was the labor market data. Whoever said that, pat yourself on the back. So now the reason why I'm doing this Zoom call with you guys is so we can really get fluent as a community to see what different fundamental factors drive sentiment, because it's not just one. It's always a multitude of things. And each month or each week or each day, it's going to be different. So you have to be able to react to them accordingly. And so you're right. At the peak of let's go back to the higher time frame. At the peak of let's just say $6 trillion, because it was 259, we saw a upbeat jobs report. So you can see here, US dollar jumps after strong US jobs report. The surge in non-farm payrolls triggered dollar jump across the board, while risk appetite deteriorated. So it's literally telling you word for word what happened. Yet again, remember that during the entire month of May, how many people were hopeful? How many people were forward looking? How many people were marrying a bias saying that this is it? We're going to see the next blow off bull market cycle. Wrong. The next bull market cycle will consist and start to materialize when the global environment creates it, right? That means people with more money than you and I, because we're not driving this market. We're not. When people with more money than you and I are willing to take on risk is when the next massive bull market cycle will happen. And we as investors need to understand that and be able to react to that. So again, stronger labor market data. What does that entail? That entails that the US economy is healthy and resilient, right? It pushes back hopes and optimism on rate cuts, which we saw start to materialize the month before in May. And it starts to weigh on riskier assets and support the dollar narrative. So we saw an outflow of crypto and an inflow into dollars. And then again, mid-June, that was further solidified with what fundamental factors? So now think we had dovish sentiment down here at the bottom of price, dovish comments from Jerome Powell, dovish comments from Jerome Powell at his FOMC meeting. What took place mid-June surrounding the Federal Reserve that further weighed on risk assets? Does anybody remember? I'll give you a hint. Instead of dovish comments, Jerome Powell leaned more so towards what?
Hawkish.
Hawkish comments, right? Now, don't just say hawkish comments and not understand what that means. That means that he did not support the rate cut narrative. He said that he sees inflation possibly being sticky and troublesome. He sees that the US labor market is still resilient and healthy. And he also said that 1 month of good data in inflation is not good enough to support rate cuts from the Federal Reserve. All of those comments lean more so towards hawkish. It builds an environment where investors start to price in a higher for longer interest rate. And again, the reason why I'm trying to get you guys to see this is because on Wednesday, you then should be able to determine, oh, dang, okay, those comments are dovish, right? He's supporting rate cut bets. He's saying that he's optimistic that the Fed could possibly start to cut interest rates. He's saying that the labor market is cooling. He's saying that disinflation is continuing. I know that all of those comments are dovish and tend to support sells on dollar and buys on riskier assets. So as a trader, I'm doing what? I'm looking for buys on GBP USD, buys on euro, buys on gold, buys on crypto intraday, looking for taking profits at higher positions, scalping the market. Boom. Inversely, hawkish comments tend to do what? Weigh on assets like crypto, GBP, euro, gold, right? So you can see here, softer than expected monthly inflation readings did not stop the Federal Reserve officials from delaying the expected start of interest rate cuts. So the rate cut narrative got pushed back. That weighs on riskier assets. We see sells on crypto, and we saw an increased demand for dollar. Now, fast forward to where we are currently at in price. Let's just look back at the entirety of the month of July, because we just had a bullish month, right? And so now we're on the precipice of either experiencing, just like when we called this top back here, when the jobs data came out, what do we have this week? We have inflation, we have the Federal Reserve funds rate, and we have labor market data. Interestingly enough, look at where, when the last federal funds rate came out, where was the market? At $2.3 trillion. Where is the market now? At $2.3 trillion, right? So If we want to see the market go higher, what narrative do you think we need to see for this to possibly unfold? Do we need to see this narrative? Yes or no? Do we need to see this narrative?
No.
No, right? We need to see this narrative. We need to see a supportive rate cut environment, dovish comments from Jerome Powell or federal speakers, and we need to see cooling in the labor market. That means we need to see lower NFP figures from previous readings and higher unemployment claims, signaling weakness in the labor market. And if we can get that type of environment, then historically speaking, again, it's not guaranteed, but based off of history, we can see that a supportive rate cut environment with dwindling US economic activity tends to weigh on the strength of the dollar and benefit crypto, right? So as investors and as traders here at CYPRX, we're not going to be those people this week that are like, oh, the fucking XRP is going to go to fucking $2. No, because we know that in order for that environment to unfold, you all now know what type of environment needs to be created. So if this week we see hawkish comments from Jerome Powell pushing back rate cuts, we see stronger labor market data, that means higher NFP and lower unemployment claims, signaling resilience in the US labor market, what scenario is most likely going to unfold? A pullback, right? Risk off. We're most likely, again, it's not guaranteed, we're most likely going to see a slight retracement in crypto, right? We're probably not going to see, if we see hawkish comments from Jerome Powell this week, higher NFP figures and lower unemployment claims, all signaling a strong and resilient US economy, which we know pushes back those rate cut hopes. And we're already on the precipice of knocking rate cuts off the table completely this year. It's probably not going to create an environment for risk assets to flourish. That means that give or take some liquidity grabs above these intraday highs, we're probably not going to break above $2.5 to $2.6 trillion, and we're probably going to start to decline. Now, to what degree we decline, again, that's up for debate. But we know most likely what's going to happen. It's going to create, to some degree, some type of sell pressure on crypto, right? And so the reason why I'm attempting to teach you guys this stuff is so that way, zooming out, moving forward, you know what to do, how to properly predict the markets, what environments need to be created to see certain assets move certain ways. To full circle back to what I said at the beginning of this, you should, as an investor in a certain asset class, know everything about that asset class and what creates its order flow, what creates its movement, why investors are investing in it, why it's risk on, why it's risk off, so on and so forth, right? So let's just cover this one last time. I'll ask these general questions. Just looking at the market update that I gave you guys this week. If you guys haven't taken your time, what the bananas? Why is this like this? All right, let's get out of that real quick. I don't know why that's so zoomed in. Hold on. Okay, there we go. All right, so if you guys haven't taken the time to just read this general market update and overview, and if you don't take the time to read these, again, why not? Just read them. You know, at the end of the day, even if you don't use the information, it'll at least be in the back of your mind, so that way you know where we are at via market sentiment. And I try to type these out for you guys every single evening during Asia session. So just real fast, somebody tell me 2 things that we would ideally like to see this week. Pay attention to the question. 2 things that we would like to see ideally this week to see dollar weakness and risk assets like crypto flourish. 2 things.
Lower labor or higher unemployment.
Good job.
And dovish tone from the Fed.
Perfect. Beautiful. That's it. You see how simple that is? If we can get those 2 things, then most likely, again, to what extent, we're probably going to see consolidation in crypto. That means crypto remains sideways, moving sideways. That means there's no demand for crypto. And we just see ranging price action. Or we're going to see more of a demand for crypto. So if we see those 2 things that you guys just mentioned, that means dovish commentary from Federal Reserve speakers supporting the rate cut narrative. And we see weaker labor market data, that means lower NFP figures and higher unemployment claims, signaling that more people are unemployed. Most likely scenario is we're going to see crypto range staying above the $2 trillion mark, or possibly breaking out and traversing higher, right? Inversely, if we see the opposite, what would be the opposite scenario, the more detrimental scenario, and a scenario that could possibly create, again, it's not guaranteed, but could possibly create an environment where we start to see sell pressure on crypto and more strength in the dollar? What are the two things?
That would be a good jobs report, and then was it hawkish comments by the Fed this week?
Good job, right? Good job. Easy, easy peasy. So opposite, inverse, one-sided sell pressure on crypto, most likely, and most likely we would see dollar above healthy, the 104.5 to 105 key psychological level, and we would see a risk-off market mood. That means profit taking on crypto to some degree. Again, we're not here to tell people that the market's going to tank all the way to $1.5 trillion just because of those environments. No, but we know most likely the predominant narrative for the week would be risk off if we see higher employment figures. That means strong, resilient labor market data and a hawkish commentary or tone from Fed speakers. That means them pushing back rate cuts, saying that they need to have interest rates higher for longer, them saying that, disinflation is not coming down to their taste, that inflation is still sticky and troublesome, and that the US economy is still resilient, right? All of these things supporting dollar buying that weighs on risk assets, right? So very simplistic. Good job, guys and gals. Thank you so much for being interactive. That was really smooth, right? So outside of that, that is just overall what I wanted to go over this week, just to get you guys the brain juices flowing, what you need to be thinking about this week moving forward. And again, make sure that if you are an intraday trader, when the news fundamentals come out, you're not reactive impulsively to the news. You're not reacting based off of impulsive candlesticks. You're really understanding how the fundamentals came out, looking for setups and intervals, time efficiency paradigm after the news came out or comes out. Right? Avoiding that manipulation window so you don't get your position liquidated, and reacting to the market conditions by understanding how the fundamentals are going to drive order flow. When you can do that, investing and trading kind of low key becomes very simplistic. Yes, of course, you have to manage risk. You have to not overtrade. You have to manage emotions, but at least you understand, unlike the vast majority of retail investors. For example, I guarantee you, I will say this publicly right now. If we see a risk-off market sentiment, and let's just use XRP as an example. Let's say XRP breaks back below 60 cents, which is, I believe, where it's hovering at around right now, and it goes down into the low 50s, right? You're going to see, and again, let's say that happens based off of stronger dollar, stronger labor market data, and hawkish tone from Fed speakers. So now you guys know that environment, right? Most retail traders on Twitter and on YouTube are going to be posting things like, what the F? What the heck is happening? Why the heck is XRP dropping again? This is bullshit. XRP is a scam, blah, 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 without even understanding the asset in which they are invested in and why it's reacting that way. Which, again, to full circle, I always like the full circle, why I'm trying to teach you guys this stuff. So that way your brains aren't like little silly putty, not understanding what you're investing in and understanding what you're investing in. You become a mature person at that point. And when you understand why your assets are not performing well, it becomes so much easier to control your emotions. Because, for example, right, the entire month of June, when we had a risk-off market sentiment, if you guys paid attention into the chat, I wasn't telling you guys to be buying in June, right? It wasn't until price bottomed out here, I started sending out dollar cost average positions, telling you guys, boom, 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 I'm adding this to my portfolio. I'm adding this to my portfolio. We called out positions on Arrow. We called out buys on XRP. Usman called out Delta Zone scalp positions, so on and so forth. You'll notice that all of that starts to pick up at bottoms of price because we understand market sentiment, right? So outside of that, This is a Zoom call I had planned for you guys this evening. I told you guys yesterday that I probably wasn't going to be able to do a Zoom call. However, I had some time. I got done some of the things that I needed to get done a lot earlier than I thought I was going to be able to. The person that I took my truck to today was able to knock that shit out like really quickly, which blew my mind because in California, when you go get maintenance done on a vehicle, you're waiting freaking forever. But I guess they just do shit differently here in Texas because they got that done in like 15 minutes. So I got back to my house and I was like, dang, I wasn't even gone for like 45 minutes. That's crazy. Anyways, so blessings to you guys. I will leave the floor open for questions for a second or commentary, but hopefully you all enjoy that breakdown. And hopefully breakdowns like this, even though they may be repetitive, if you've been in this community for a while, really get you to see that it's not about magic indicators. It's not about how your fib is set up or any of that bullshit. It's about just understanding order flow. And then when you can understand that order flow, right, on the higher time frame, you can jump down to the lower time frame. And that's when scalping these markets becomes efficient because you understand, okay, well, the daily and the 4 hour are bullish because of these supporting fundamental factors driving demand for risk assets. So as a scalper on the lower time frames, what should I be looking for? Buys. It's that simple. And then it literally alleviates the pressure in your mindset to sell based off of structure on the lower time frame that you might be seeing. And you start saying to yourself, okay, I'm going to trade on the higher time frame. Wait for price to come down into discount on the lower time frames, buy that shit, ride that price to the upside, take profit, and then boom, you move on to the next trading day, session, week, month, so on and so forth, and you rinse and repeat. Because these fundamentals that come out, they're the same fundamentals every single month. Every single month, we're going to get NFP. Every single month, we're going to get labor market inflation, CPI, PPI, PMI, so on and so forth. It's the same shit. You just have to learn how to react to it. So anyways, blessings to you guys. I'll leave the floor open for commentary. Yeah, hopefully I did a good job at breaking all that down for you all.
Yeah, I just want to say I appreciate the way you did it this time. I like to be questioned and challenged.
Yeah.
Sinks in a little better.
Yeah,
On the
I'll
front
try.
end.
I'll try to incorporate that moving forward, especially when I have more time to do that for you guys for sure.
Cool. I appreciate you.
Alrighty, so I hope that you all enjoyed that fundamental overview and that video breakdown, going over the total cryptocurrency market cap as a whole, breaking down order flow and talking about fundamentals in detail as to what took place the entirety of the year in 2024 and what to be paying attention to moving forward. If you did, again, do us a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. And with all of that out of the way, be cognizant, be aware out there, and I will see you all in the next video breakdown.